Hi friends, welcome back. So inflation, CPI data is out today, and I want to go over the numbers with you and also chat about the stock market. So let's just jump right in. Headlines, inflation picks up to 3.2%, slightly hotter than expected. And essentially you guys can see here, we're clearly above the 2% that the Fed wants. However, we're going to take a look at how the markets respond. Believe it or not, Dow jumps more than 200 points, S&P 500 pops 1%, and Nvidia was crazy. I think it was like up 7% today. And I guess the AI hype train keeps on running. And these are the major industries: the Dow, the Nasdaq, and the S&P 500 are all up today. Moreover, take a look at some headlines. U.S. core inflation tops forecast again, reinforcing Fed caution. My personal opinion on this stuff is that the Fed should just stand pat the rest of the year. However, if you read all of the Wall Street writings and columnists and articles, etc., the market / Wall Street is expecting a either 2 cuts or 3 cuts, something in that range. But we'll see. Inflation is still a bit sticky. Moreover, you can see here core inflation 3.8, overall 3.2. Possibly it looks like that we peaked. Was that a year or so ago? You guys can see the chart here. However, again, we're still above the 2%, which we're trying to get back to this range, right? But we're kind of up there. So I don't know why we'd be cutting other than it's election season and moreover Wall Street keeps begging for it. But like I said, I think we should stand pat. There's some more charts that we're looking at, and I want to show you a lot more because I think it's important to look at everything. These are wages compared to your inflation, right? Your prices. So hourly earnings is the purple line. Then you got the teal line is your weekly earnings. And yes, that is above CPI. But take a look at the whole chart, right? So if you take a look at the prices, right? So here, it was much, much higher than your wage gains. And so essentially what we're trying to figure out, and this is, I'm sure, depending on where you work, is like, okay, does your work pay you enough for the current prices, right? We had just major price increases, and yes, we've had wage increases, but not necessarily in keeping up with. And so what's going to happen is depending on which part of the chart you look at. So if you want to try to make it seem like workers are getting paid enough, you say, oh, see, look, wages at weekly and hourly wages are above CPI. And it's like, well, yeah, they are now, but they didn't necessarily catch up to the massive gains that the essentially all the prices of food and energy and housing has cost before, right? So again, this is the part right here, which I think is the key compared to these two. So keep an eye on that. Moreover, what exactly is moving up? It's actually really interesting when you break it down by category in terms of prices here. So motor vehicle insurance has been really expensive, and this has been the hot category as of late. These are year-over-year price increases, right? So you have your motor vehicle insurance, you also have transportation and hospital services, expensive, and shelter. So these are all major expenses. You guys know this kind of stuff. Food away from home is also up. Okay, so what is down? Well, I guess your utility gas is down a bit. Your airline fares are down. And again, this is from year over year. Energy is down is also, and there's the thing is I'm looking at this, like gasoline is down also too compared to last year. And you guys can, write in the comments when you go and fill your car at the pump, do you also say, that there is a decrease in gas prices? You guys can just tell me, because I'm not in USA right now. I mean, I can see the numbers, but I just like to hear it in your neck of the woods. However, your electricity is up, right? So these are sort of the things that are moving up and down. Here's another way to look at it. Just kind of interesting. We saw this one before. Juices and drinks are up. And I've always mentioned this, is that when my wife and we go to the grocery store, we basically buy stuff on sale. So, and this is real. Last time we went, I think it was like last week. Apples are like ludicrously expensive here in Korea. It's like I'm not paying $20 for a bag of apples. And so, we went to another store and it was $10, and it was like, okay, fine, I'll pay you $10 for apples, but I don't want to pay $20. But it is like that. So some stores in certain fruits, because I like fruit, it's just that the price has gone up like crazy. Now, in terms of like juices and drinks, I don't really mess with this stuff, and I can't. I maybe because guys, I'm just telling you, we just don't really buy orange juice that much or apple juice and that kind of stuff. But maybe it's just because the prices are so high, and that's why I was mentioning that. We buy whatever's on sale. So if we go to the store, chicken's on sale, we're eating chicken that week. If we go to the store, pork's on sale, we're eating pork that week. Beef's on sale, beef that week. And I'll be curious if you guys are same or different than me. Some people don't change their lifestyle depending on prices. They just eat what they like. But I do adjust myself, and that's sort of what I'm mentioning for you guys. Sugar is up as well, as you guys can see that as well, up 6%, and baby food and formula. So for those of you who have kids, you probably would know this right away. You'd be able to say, yeah, it's definitely more than last year. Moreover, you can take a look at this. Yeah, this shows you vehicle insurance again. This has been another one. It's calmed down a little bit. So again, this is year over year, but I remember looking at this a couple months ago. It was missions to sporting events, and I guess like going to professional games or concerts in USA has just gone through the roof. And people were talking about that. So I'd like to hear you guys' thoughts on this stuff. Care for elderly at home and invalids is up, and non-prescription drugs are up. So you guys can check out all this stuff. So really the key thing that's sort of bringing inflation down a bit is your energy costs are coming down, right? They're still high, but they're lower than they were last year. And that's sort of why you got to look at the whole charts together. It's going back to this one chart that we're talking about where there was this massive spike in inflation and a lot of wages hadn't necessarily caught up with it. For us, the big ones is just food and energy, at least here in Korea, still seem high. So yes, maybe it hasn't increased as much as in the past, but it hasn't declined. So it's still going up a bit and still seems very expensive. So as I'm just telling you guys our personal opinion on this stuff, and I go to the store every day so I can see the prices for myself. You can see here, stock traders bracing for worst shrug-off hot CPI. And this is the weird thing. So as we talked about, the markets were up, right? We talked about that. And this is a chart, and the chart is titled Unusual CPI Day. So basically, it's how much does the market move, and what is the relation to when the numbers come in, above estimates, at estimates, or lower than estimates. So typically speaking, when your CPI is higher than the estimates, which it was today, the market would normally go down. So this is like these kind of examples here. So this is when it's higher. But I guess these days, and I'm showing you guys these days, I guess it's just kind of random. These are all the times it is higher. So usually when it's higher, so this was, well, this counted up here. So 1, 2, 3, 4, 5, 6, 6 days it would be down. And then on the, when the market would go up, when the CPI is higher than expected, would be like 3. And then you got one that's kind of flat. So I guess if you want to take this data and I just kind of eyeballed it there, you could make the case that we are about when CPI data comes in higher, maybe 60% of the time the market drops and 40% of the time it goes up. So that was just eyeballing it here. So if you guys want to, look at this stuff a little bit more carefully, you certainly can. But I'm just showing you that it is kind of odd that the way that the markets work. But markets be crazy, and that's just what it is. I want to show you guys this too, and this is something that I think is really important to look at and understand that inflation is not just an American problem. Sometimes if you read comments and you read the YouTubes or whatever, it makes it seem like that America is the only one that has inflation issues, but it's just not the case. And I also know that many people around the world watch this channel, so I want to show you different types of data because I think it's fun to look at this stuff. You can see here, so this is the UK, US, Eurozone, Japan, and China. We're all peaking around roughly kind of the same times, and they're all kind of in decline, right? China is actually in deflation, so the prices are actually going down. Moreover, this is actually really interesting. This is sort of the central banks, what they're doing. Are they standing pat? Are they cutting? Are they raising, etc.? So in USA, you can see here, so we've had a lot of increases. That's all these red boxes right here, right? So red, 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 red. This is all USA. I'm pointing right here. And then we've stand pat, so that's why this is all blank. You take a look at some other places like Brazil, they're actually cutting rates there. Czech Republic, they're cutting. Hungary, they're cutting. Peru, they're cutting, etc. Some places are still raising, like Turkey. You guys can see it here. And so it's actually really interesting, though. If you look at the major countries, you'll see, though, like, say, UK, US, Europe, Canada, just Japan, they're all staying pat. You guys can see it right there. And then China's also stand pat. Take a look at this. This is also a really fun chart to look at as well. So this is looking at central bank policy and also to the CPI data of various countries. So this is the USA. Again, we had that spike, right? That was your CPI right there. And then Fed is raising rates, right? You can see that. And now we're standing pat, right? Take a look at this. This is in Japan. Japan has had the same. They're actually at negative. It's actually kind of interesting. And there's been talk that they're actually finally going to raise rates eventually. We'll see. But they've been basically standing pat for a long time there. You guys can see that, not really any changes. Moreover, their CPI is starting to come down as well. So Japan's a weird one. Their economy hasn't been growing for a long time. Their market has been, like they call it, the lost decade. It's just, it was actually just recently. It just hit the same levels that it was like 20 years ago, something like that. And actually, Buffett got in Japan. I remember reading articles about that. Maybe a couple years ago, he was jumping in Japan. We'll see if they start growing. The problem is with Japan. Same with China. Same with Korea. is that we have population imbalance problems, and essentially young people aren't having enough kids to replace the older people, right? So we actually have shrinking populations in this part of the world. And we actually have that similar situation in USA starting around 2070. I think it's something like that. I've seen the census data on that. But anyway, I just wanted to show you the stuff that when you compare these charts of, again, this is CPI data, various countries and what their, central banks are doing. It's actually really interesting compared to the USA. So China, you guys can see here, they're basically standing pat. You can cut a little bit there, right? Just in comparison, because they're trying to spur economic growth. And they actually got a problem with their prices going down, so deflation. It's not great for the economy when everything starts going down. It means you got a real demand problem. Essentially then people start waiting, like, okay, well, if I think my prices are going to go down, I'll just wait till it goes down further, and then I'll just sit on my hands and do nothing, right? Like it's really a tough problem to solve. But and then the reverse, if everything keeps going up, you get that FOMO effect where oh, I better buy the house now because it's going to go up in price later, and then you create bubbles. So that's essentially what we're always talking about with, say, the Fed in USA or anywhere. Is you just want price stability. You don't want things to go crazy, skyrocketing to the upside, or crazy downfalls, spiraling down, right? So you want stability. But I do like to look at these numbers with you guys because I want you to understand that this is a global issue, that, right? Not just USA, and have a broader perspective on the world. Here in Korea, you can see here we've stayed pat for a while. CPI, what we were around between 2 and 3, something like that. But it does fluctuate, and this is something that you do want to track. In Europe, you can see here they've been standing pat, so they also raise rates the same as USA, right? You guys can see this stuff here. But not every country is the same. So if you take a look at this, and I'm just pulling up various ones. If you look at Russia, I'm laughing, and it's there is a war going on, and I don't make any light of the war. But if you look at the their policy and the CPI, it's just all over the map. So what is this? Like their rates are like 15% is something like that, some crazy thing. And I don't track Russia all the time. I'm just looking at the stuff now, and you can see it's well above their CPI. And then Turkey's been the really crazy one. I've been reading their inflation's like through the roof. I mean, it's like in the 70% kind of stuff. And so they've had to raise rates like nuts. When we lived in Vietnam, it was a similar situation to where like the banks were giving like crazy amounts on the savings accounts. And so a lot of people are doing, foreigners, they were dumping money into the Vietnamese banking system because rates are so good. Like you're looking at like double digit rates and risk free essentially, but they actually slowed down the amount of foreign money coming in because too many people were throwing the system out of whack. And in fact, if you want to hear about these kind of stuff, and also to hopefully have some positive impact on your life, and I'm talking about just life around the world, check out my book at Positive Angle. I don't hard sell it that much because I just don't like to hard sell stuff, but frankly, it's a good book, and I like it, and I wrote it for you. So check it out, and some people have been picking it up this month, and so I do appreciate that. And if you have a copy of the book, please put a review on Amazon. It helps other people to discover it. So just want to mention that, guys. Moreover, I want to show you guys this. Let's take a look at some actual data from the market here. You can see here, Microsoft was up big, was at 2.66, which is pretty big for Microsoft because it's such a big mega cap. NVIDIA was the even bigger one at 7%. Amazon was up as well. Meta, Google, Apple. So we got some little bit of positivity going on there. Eli Lilly also up, and also Costco was interesting because remember a lot of these stocks were down. I think it was last week. So this could just be a dead cat bounce or a bear market bounce, but we'll see. I just find it odd that today, again, the CPI data came out hot, and yet we're all running up. You can actually look at more, in particular, this kind of stuff, though. It's interesting. So you can see here, it was led by the NASDAQ was up the most, right, among these, and the micro and small cap were down. You can also take a look at this. Tech led the way. Then you got communication, consumer, discretionary, and then on the negative end, which is utilities. And they've been an underperformer. You can take a look at the past year, right? So they've been underperforming, whereas tech has been up like 52%, and communications up 52%. So this is a good way to track the market if you're curious, like what's moving and what's not. And if you want to see what's in this stuff, so you can click on here, and this will show you like kind of what they have. So this is a good way to do this if you don't want to necessarily pick individual stocks. You can just pick kind of sectors, right? So you can get your Meta, your Google, your Netflix, Disney, etc. And then this is through sort of your ETF. So that would be the XLC. But I'm just showing you guys this stuff because it is good to track these things if you're interested in the markets. So, I mean, it literally shows you what's moving, right? So you can see today the momentum and the growth was up, right? Whereas your value wasn't growing quite so much. But most stuff was generally in the green. Moreover, is actually too, it's interesting. You can actually look what's going on around the world, which I wanted to show you guys today. Yeah, let's stop here. So this is really interesting is these are your emerging markets, right? So if you want to look at today, like Chile's up, Hong Kong's up, China's up, Taiwan, and then like your losers are like Nigeria, Colombia, Turkey. And if you want to go over the past year, and we don't talk about this stuff that often, but it's fun to track, especially if you want to get a little bit different perspective on this stuff. Like Argentina's had a pretty good year, Greece, India, and this is their markets, Peru, Colombia. But on the negative end, though, Nigeria, Hong Kong, Thailand, China, right? And then also to South Africa has been flat. But it's fun to compare these things. Boy, but Nigeria has been on a horrible streak there, down 68%. I think that's the 3-year. Yeah, that's the past 3 years. So I guess if you want to buy low, that would be the time to do it. But I mean, that would be obviously very, very risky. I'm just showing you guys this different stuff because it's fun to talk about these kind of things. Moreover, I want to take a look at this as well. Some of the news going around the market, something I mentioned from time to time, is there's definitely a segment of the population that's struggling in the USA. I see this, and this you can see the headline. Some Americans have become saddled with credit card debt as rent and everyday prices remain high. So my understanding of the situation is for some people that they're really struggling when food and energy goes up, like because they already have their budget to essentially just barely make it. And if there's any big changes in food and energy, then it really puts them, over the edge of their budget, and they have to use their credit cards to make up for that. And then the problem is that, then if you just make minimum payments, the sort of the debt mountain keeps getting bigger and bigger, and people keep struggling. And so there's definitely a segment of the population that fits that. And so, one of the things that I saw too, this was just yesterday that came out where people were pulling out money out of their 401ks for emergency. And the amount of people that do that has actually gone up in 2023. So you can see here in 2022 it was 2.8%. I guess people did that, and now it's at 3.6. So that's going up. You have credit card delinquencies going up, and it's just the like I said, the wages haven't necessarily kept up with the prices. And moreover, this is kind of interesting as well. This is the states with the most foreclosures, and we haven't talked about this one before. And I'll be curious if you guys could have guessed the top 5. So Delaware is the leader. Again, this is states with most foreclosures. Then you got Nevada, Indiana, Maryland, and New Jersey. So I wouldn't have guessed all of these either. I would have probably figured maybe like a Florida or a New Jersey perhaps, because I know they're more of the bubble area. But it's not just the bubble prices. It's also, because some people can't afford to pay the bubble prices, right? You have the mix of high prices plus people, wages don't quite match, or maybe there's a slowdown in the economies there, et cetera. So, but you could probably make the case like something like Nevada, maybe the COVID really hurt them, and maybe the tourism business hasn't come back. I'm not sure. I'm not in Nevada to comment on Las Vegas whether or not tourism did come back in force. I know it did for a period when everyone wanted to go to hotels and airlines like right after the pandemic ended because people are so crazy to get out, but it hasn't been sustained. Who knows? I'm not in Las Vegas to comment on that, but I just wanted to show you guys this though. I think this foreclosure thing is really interesting. And other thing going around the market as well is I guess Southwest, they're cutting their capacity. So if you fly with them, they really got hurt by the Boeing situation. If you guys know, basically Boeing planes looks like they weren't making these things properly. And frankly, this whole Boeing thing is dangerous, and it's embarrassing. And I'm sure you guys know if you've been following this thing at all. And it's been affecting some of the U.S. carriers. But the U.S. carriers have had problems for years. And Southwest has been one of the better U.S. carriers. But if they're even cutting I guess they're cutting their flights or whatever due to the Boeing thing. It's really a problem. Moreover, talking about U.S. companies, 3M got a new CEO. I don't know this guy personally though. I think he's about my age and he went to my school. But I wouldn't want to. I wouldn't want to be CEO of 3M right now. They're facing multiple lawsuits. It's like they had the it was like the earplug thing with the Army, and then they have another thing where some of their products that they use are like, I guess, toxic, and they had a hard time with like where do you put the things after they're been used. So there's a bunch of things going on over there with 3M. I haven't been tracking it that closely because there's so much going on, but the stock has been really an underperformer. Past year down 4%, and then the past 5 years down 50%. It's just been a one-way ticket. I think one of the things that hurts them is they've they make a ton of things, but for like say their Post-it notes, just for example, I know that's just a small product out of many that they make. They make a ton of masks, etc. Is they might not necessarily have all of the things that we're going to be using all of the time. They are going to spin off part of their company, like meaning like in the digital world, are we going to keep using Post-its, and in the pandemic world, are we going to still be wearing masks in the same as we did the pandemic, right? So yes, we'll still use masks, but not maybe at the same numbers that they had before. Lastly, I want to show you guys this. This is actually a really big story. In San Francisco, they're offering tax breaks now, I guess, for developers to come in and turn office space into residential. I think you're probably going to see this in multiple cities, because essentially you want to get incentives to the developers to say, hey, come in and change the stuff around. And we'll see. This is my guess, though, is that probably they're going to be more in the luxury end. I say probably because I don't know for sure, but that's been a big problem in the USA, is where the developers are more incentivized to make luxury housing because there's more profits there than make housing just for, how about this? How can I say this? They're more incentivized to make houses that are really expensive opposed to stuff that's affordable. And you can obviously define that, any way that you want. But this has been a big problem in the USA is the lack of affordable housing, or lack of housing for new first-time home buyers, or in this situation you can say first-time condo buyers or apartment buyers, if you want to say. I'll be curious what ends up with this. I think they were shooting for, I want to say it was 5 million 5 million square feet of commercial space by 2030. So we'll keep an eye on that. I think it's a really interesting thing. And again, I was mentioning that. And I guess voters voted on this thing, but I was thinking, I think many cities will probably go down this route as well. So anyway, I'd love to hear your thoughts on anything going on in the market. What's your thoughts on inflation? Will the Fed cut this year? Or will they stand pat? Or, in fact, could they raise? I always love to hear your thoughts. I share mine and get yours as well. So thanks again for watching, everyone, and I'll catch you next video.